The new month is upon us, and it's the first trading day of November. October left us with some mixed sentiment on the local market, with the Q3 earnings driving market reactions, both locally and globally. Internationally, we're seeing that tensions in the Middle East, coupled with the U.S. elections, they've all had a ripple effect in the market, boosting safe haven assets like gold and digital assets such as Bitcoin. We're seeing that Bitcoin literally last month almost hit its all-time high, while oil and gas companies are experiencing heightened attention. On today's show, we're diving into what is happening, the latest market-shaping headlines. TotalEnergies posting a solid Q3 performance, beating forecast with pre-market profit, tax profit of 11.2 billion naira. That's some massive numbers, if you ask me, showcasing impressive resilience in Nigeria's competitive energy landscape. Meanwhile, on the policy side, Nigeria's National Economic Council has steered conversations with its recent recommendation to withdraw the tax reform bills. It's just tax reforms, tax reforms, tax reforms. Right now, we're seeing that a lot of conversations around the withdrawal of the tax reform bills, and notably, cash continues to flow out of our banks, with currency in circulation rising to 1.6 trillion naira, reflecting positive shift in consumer confidence and economic pressures. This is Market Pulse on News Central in partnership with nairametrics. I'm Frank Fagbo. Let's begin with some of the top stories from the global market. It's been a lot happening against the backdrop of what is happening in the U.S., focusing on the global market. Amazon's strong third quarter results have captured investors' attention, so showcasing 11% increase in net sales to $158.9 billion and earnings per share of 1.43%. It's literally exceeding analysts' expectations. Amazon Web Service, that's AWS, also posted a 19% revenue gain to $27.4 billion, while advertising revenues also matched that growth, rising to $14 billion. Now, this is a robust performance, and this robust performance led to a nearly 5% jump in after-hours trading, signaling continued confidence in Amazon's diverse revenue streams against the backdrop of a competitive tech landscape. In the U.S., the commercial banking sector, the British Bank, HSBC, Barclays Bank, and Standard Chartered Bank are all expanding their presence to capitalize on the sector's growth, which has surged from $310 billion in 2019 to $429 billion in 2023. Now, by focusing on corporate banking rather than retail services, now these banks leverage global trade flows and deep corporate relationship to carve out a niche in the crowded market. This move aligns with their strategic goal of increasing U.S. exposure within the complexities of consumer banking. Now, against the backdrop of economic uncertainties and geopolitical tensions, the price of gold has soared, with gold literally hitting the $2,748.40 per ounce, $2,448.40 per ounce, as investors seek safe haven assets. Simultaneously, we're seeing that bond traders are closely watching labor market trends, as the recent data reveals a drop in U.S. job opening to 7.4 million, the lowest we've seen since January 2021. Despite fewer openings, hirings rose to a 4-month high, suggesting a mixed but resilient labor market. Now, this draws focus on gold and labor trends. It literally underscores the cautious sentiment that continues to shape the market dynamics, as a lot of investors are bracing up for potential volatility ahead. And remember that in just a week from now, we're seeing the U.S. election. It's literally going to affect the market. A lot of analysts trying to figure out what really is going to be the outcome of the market after the U.S. election. If Trump comes on top, the crypto market, most of the investors in the crypto market are going to be excited. If the Democrat, definitely the equities market is going to react. That's your global market highlight. When we return, local equities market updates from the NGX. This is Market Pulse. Let's take a look at what is happening in the market. The local equities market, we're starting with the overview. What is the percentage change? What is the all-share index of the NGX? We're going to understand that. You can see it on the screen, 97,432 points. And this is a far cry from the 100,000 point level that a lot of analysts are literally expecting. Let's see what the outcome of the first quarter of 2025 is going to be. Was still a negative day. What a way to end on the Friday trading day. 0.22% decline. The percentage change was saying that 59 trillion naira is what we're having. And this 59 trillion naira started from the inception of Aradel Holdings listing on the floor of the capital market, and we're seeing that that is literally, it has moved the market capitalization of the all-share index to 59 trillion naira. Let's take a look at what is happening as regards the top 5 gainers, the top 5 losers. Look at the top 5 gainers we have. John Holt over here, 3 naira 30 kobo. That's some 10% gains in the market. Unicel also hitting the 5 naira 62 kobo there, 9.98% gains in the market. We're also seeing Red Stars. It's been a long time we saw Red Stars among the top gainers. WAPIC and PZ Crossings. Sometime this week we had PZ Crossings amongst the top losers, but right now we're seeing it bounce back to the top gainers. Red Stars, 9.83% gain in the market. It's quite a bullish day for all these top gainers. 9.52 gains as well. We're seeing PZ 8.64. Let's take a look at what is happening amongst the top losers as well. Look at our top losers. Aradel still making the list again, consistently among the top losers in the last 2 weeks. What's happening? It has fallen short of even the 500 naira mark. That's the price per unit, the share price per unit. 10% decline in the market. It's quite a bearish day for Aradel. It's been consistently a bearish week, as a matter of fact. And a lot of investors are still of the opinion that Aradel is still trying to find at bottom. Some investors are saying, if you go in now, you just might end up catching a falling knife. But let's see what really the outcome of this is going to be in the next, as we're edging into a new week. Ella Lakes is also sitting pretty at a 9.92% decline. Multiverse, 9.66% decline. And then let's take a look at what is happening with top 5 traded stocks. We have nothing less than 4 banking stocks making it to the top 5 trading stocks. Fidelity, Jazz Bank, Zenith Bank, and GT Coal. The value of each, you're seeing the value. Which of the shares has the highest value? We're seeing Zenith Bank, 1.65 billion volume of trade, 1.65 billion in terms of value, and 40.7 million volume of shares traded in just one day. It's quite a liquid day for a lot of the banking stocks, and it's been consistently like that. I guess it's why we're seeing the government coming for a share of the pie, because the banks are literally making a truckload of money this season. Let's take a look at what is happening with African currencies. Look at that. We have it sitting pretty around the Nigerian naira against the dollar, sitting pretty around the 1,644 mark. The Ghanaian cities, we're seeing it around the 16.3 Ghanaian cities. South African rand, 17.53, and then the Moroccan dirham, edging into the northern part of Africa, Moroccan dirham, 9.82 Moroccan dirham, Egyptian pound, 48.94 Egyptian pound, and then the Kenyan shillings, 128.95 Kenyan shillings. Well, the Nigerian currency literally has a lot of work to do, because sitting pretty was seeing Nigerian currency leading the pack, 144 naira to the dollar. There are lots of conversations about our currencies. What is the way out? The CBN governor increasing interest rate just to make sure they tame inflation, and also some incentives just to bring down the price of the naira to the dollar. We're an importing nation, and if there's anything we can do to make sure we resolve our forex crisis, it will definitely be in the interest of the entire Nigeria. Up next, we're coming up for the pulse of the day. Daniel Alpha, who's the head business development, PU Prime Africa, he joins us for what we have up our sleeves. TotalEnergies has released its unaudited Q3 earnings, the 2024 result, posting a solid pre-tax profit of 11.2 billion naira. And trust me, this surpassed a lot of expectations amidst intensely competitive energy markets. You're seeing that the market has been very, very competitive. Look at what Rwanda is doing. TotalEnergies is also coming, surpassing a lot of expectations from analysts. Now, this performance underscores the company's resilience and operational effectiveness, positioning it strongly for the final quarter of the year. Also, the Nigerian National Economic Council, NAC, has also made headlines recently recommending that the withdrawal of the tax reform bill should be placed at the front burner. Now, the Council's decision reflects government sensitivity to current economic pressures and balancing act between fostering economic growth and revenue generation. Meanwhile, we're seeing what is happening with currencies. Currencies outside the banks in Nigeria has risen sharply with 1.6 to 1.6 trillion naira, leaving the banking vault over the past year. Now, this increase points to a significant shift towards cash preference among Nigerians, potentially reflecting economic uncertainty or trust issues with the banking sector. Joining us for a breakdown of the pulse of the day is Daniel Alpha, who's the head of business development, PU Prime Africa. You're very much welcome to the pulse of the day, Daniel Alpha. We can barely hear you. I don't know if you can unmute yourself so that we can have a smooth conversation. Daniel Alpha, I don't know if you can clearly hear me. You need to unmute yourself so we can have a seamless conversation. Can you hear me?
I can hear you clearly, Frank.
All right, amazing. What are your thoughts on TotalEnergies? You heard what I talked about, the Q3 performance so far. Many are praising their ability to surpass a lot of forecasts, posting 11.2 billion naira in pre-tax profit. What does this suggest about the company's operational strategy?
I think that we all know that Total is one of those companies that quickly divested from the future risk that crude oil will pose to the global economy, and its investment in renewables, oil and gas has really positioned it. And at least we've also seen investment. I imagine investment in terms of the anchor projects in US, the Phoenix gas project. So operationally, Total is a sustainable business in terms of operations, and it is reflecting in the pre-tax profit and the stability that we are seeing from that sector. Of course, there will definitely be risk in terms of its operations, but overall, I think that the company is well positioned with its strategy in terms of, yes, diversifying, just not just focusing its entire operations on oil. Yeah, there's also a divestment to get to other renewables and energy sources. So it is a good one for the company, and it's showing that investors can begin to now pitch tents towards the company going forward.
The share price has shown notably movement. We're saying based on TotalEnergies' performance, what insight do you have regarding the fundamentals driving these stocks, and what are the past prospects as we head into Q4?
As an investor, I'll be looking at the entire operation of the business, and there is a level of efficiency. I'll be looking at diversification. I'm looking at the diversification and the fact that they diversified its operations into other sectors. I'm looking at investment in so many LNG projects across the world. You get, and in terms of market position, they are one of the well structured companies in that space. You get, and this balance sheet is also strong. From what you are saying, the balance sheet is also strong, which shows that in terms of dividends to shareholders, there is a major expectation coming from. So into the Q4, which we are already into it already, renewables will keep doing well. Market conditions will keep reflecting its performance. Even though we know that the energy market is volatile, that is a fact, but it is well positioned as a leader in terms of where investors will want to pitch their tent. And regulatory-wise, the world is moving away from low carbon emissions and everything. But
that's right.
Because they've already positioned themselves as a renewable energy force, then it means that it's all good for anybody trying to look at investing in that in that particular stock on the long run.
All right, let's shift gears a little bit. Let's talk about what is happening regarding the National Economic Council's recommendation to withdraw the tax reform bill. It's sparking a lot of controversies, and we're saying that
Yeah.
in your view, how does this decision impact local and foreign investors' confidence in Nigeria? Because there are lots of conversations about the fact that we need investors to come in. And this news, what's your take about that?
Okay, so it's a two-way conversation, right?
Yeah.
First, you look at it like, okay, um, when government comes up with a reform bill like this and goes back on it, it might show a sense of instability, sense of uncertainty. Was there no adequate research done or consultations done before these reforms were announced or were initiated? You get that is what investors will begin to look at. And another side is that, well, it could also reflect that, yeah, the government is actually doing this for the people, because then if people are saying this might not work for us, then it's important to take it back and review it, right? So overall, you might look at it as an uncertainty. At the same time, you also look at it as government just being democratic enough to take back a policy that was not well accepted, and now looked into reforming it properly to ensure that it serves the purpose. Because at the end of the day, the idea of the tax reform is to make the government more money, right, while also stimulating some sectors of the economy. So it has to be a win-win for it to make sense, and that is what investors will be looking at the end of the day.
All right, Daniel, if I heard you clearly, you said the people. Are you sure it's the mindset of the people, or perhaps the northern governors who are opposing this tax reform? Are you sure it's from the people?
Okay, so that is a very, very dicey conversation, because then the governors represent the people one way or the other. If we now start going towards, are they doing it effectively? That's a non-economic question. You get that is becoming political. But if it's about the task at hand, every governor, every state government wants to make more money, from whatever comes from the federal coffers, or even for internal generated revenue. So if they are feeling the tax reforms do not fully capture what it should capture, then it calls for reassessment, re-examination, right? At the end of the day, if the tax reform would improve or stimulate the economy, that should be the focus of whoever is championing the National Economic Council, championing the tax reform. So re-examining it is key, but of course it shouldn't be delayed so as not to defeat the entire purpose of the reform bill in the first place. That is the key conversation here.
All right, let's shift gears a little bit from there. Let's talk about what is happening with our currencies. 1.6 trillion naira. Over that, 1.6 trillion naira is what we have outside the banks. And there are lots of conversations around people literally interested in cash transaction these days. Remember, this is against the backdrop of what happened in the last 3 weeks. Many of the Nigerian banks, commercial banks, had to start changing their core banking applications, and it literally affected digital banking. And right now, we're seeing the increase of 1.6 trillion naira. Now, what's your reaction to this, and what's your take about all of this, and how it's literally would affect the market? And do you think it's a reflection of trust issues from the people to the banks?
This data is coming at the right time. I think it reflects the success or failure, or even of what interest rates by the CBN is doing, the monetary policy rates, right? Because in ideal economic conditions, whenever interest rates is increased, you should be seeing a lot of money going towards the bank, right? Towards the banks, because then the interest on savings is increased. You begin to see more investment. You can begin to see, instead of fixed deposits increasing, what's the word? Your bonds, treasury bills are doing big numbers. People want to invest more. People want to save more, because it's more profitable to save, right? But on the other hand, with us, it's reverse is the case, right? As this is happening, we are seeing more cash transactions happening. Of course, it's majorly because of number one, yes, there is a trust issue, right? We've seen traditional banks, the major banks, falter in terms of their core banking responsibilities. Nigerians result into trusting more of the fintech banks or smaller fintechs and microfinance banks for transactionary activity, rather than the traditional banks, and that has led to a lot of trust. If you've seen, in fact, we saw a bank recently that did over 2 weeks of shutdown, right? If you saw another one do it previously before then, that would always lead to a negative sentiment into operating in the banking system. Then remember that there is also a large market of POS transaction.
That's right.
Again, in this part of the world, that's even made the currency more expensive, because Nigerians would have to pay extra to collect the same cash. So that has already created another entirely different industry, largely because we are still an informal sector, a largely informal sector, which I believe that should be one of the key focus of this central bank, to push us from a largely informal sector to a more informal sector, where it will then make sense for you to begin to push monetary policy, and it will be of great effect, and it will have direct effect on the economy and the climate as economic climate as a whole. We are not. It's the high inflation and the living and rising living costs is making it difficult for people to want to take money. So it looks like a longer time, because then you also just hold on to cash as security, because you might want to spend at any time. So there are a lot of factors, and majorly economic conditions is part of it, and also because of our informal sector is also a major cause of that also.
Daniel Effa, Head Business Development, PU Prime Africa. I want to say a very big thank you for joining us on Market Pulse.
Thank you very much.
It's been a great time having conversations with you around what is happening in the markets. We're going to be leaving you with what is happening in the African market and also the global market, for you to get an insight as to how the market is reacting to so many stories across the markets. My name is Frank Fagbo. I'll see you same time next week, where we talk about issues bedeviling the market across the globe.